Join the meeting.
Join the meeting.
Oh, what's the number? 317-279-9303.
All right, good morning, everybody. Hope everybody's well. We begin our 12th week of the semester. Not too many weeks to go, 3 or 4 more, and we're all done. Our 7th week of this ungodly quarantine and 6th week of online learning. That can be ungodly depending on your perspective. So welcome, everybody. I hope you're all well. Hair's combed, shaved. No brothers or sisters who you've beaten up over the weekend. Everybody is in good shape. So this week we're talking about chapter 11 of our textbook, Standard Costs, which is another form of budgeting, but on a budgeting on a per unit basis. So we're going to look at a video about that and how Starbucks does that in just a minute. But our main concentration is to determine what the definition of standard costs are and the balance scorecard, financial and non-financial measures of a company's performance in managerial accounting. Many of you in some of your classes thus far have talked about SWOT analysis, strengths, weaknesses, opportunities, and threats. Balanced scorecard is another interpretation of SWOT. Companies used balanced scorecard other than SWOT analysis. So that is discussed in chapter 11, and we will review that as well. Many of you, as you go on in your studies next year into finance or other accounting classes or managerial performance classes, the balanced scorecard is a way of interpreting your performance both in a financial aspect but also in a non-financial aspect. So that's a good definition to have. Also, we will have a quiz this week due on Sunday on chapters 10 and 11. That quiz will represent 5% of your grade. It will be posted on Wednesday, due Sunday, May 3rd. Your examination 2 has now accumulated 62% of your course grade. So if you go into your Blackboard Grade Center, you'll be able to see 62% your cumulative average in this course thus far. Either I am teaching unbelievably well, or this format fits you guys very well, or I'm giving too easy of an examinations, but everybody did excellent on examination number 2. I think the class average was in the very mid or high 90s. So I think it's probably a combination of both, with less on I'm teaching this so well. I think you guys are grasping the material in the way I give it. And also maybe I'm giving easier examinations, maybe not. They're the same examinations basically from prior classes where the results were not quite as good. So I commend you all on your work thus far. If you do have questions on the examination, I have posted back your file folders only if you got less than 100. If you got 100 on the exam 2, I didn't send you back the file because there's nothing to correct. But if you have concerns about your grade, please review your grade file that I returned to you, and also look at the solutions that I've posted in Blackboard, which were my interpretations of the examination. If you have specific questions on that, let me know. I also remember our office hours for this class are Wednesday afternoons from 1 to 3 o'clock. Please, if you want to talk about that, let me know. But I'm not going to go over examination number 2 because you guys did too well and made me look like either a genius or too easy-goosey instructor. But we'll answer that question later. But everybody is doing well. Your grade averages are now in Blackboard. And we still have basically 48%, excuse me, 38%, good math, Mr. Hassey, 38% of your grade left, which will be a couple of quizzes and examination number 3. Remember, examination number 3 is not cumulative. It's just on the last third of the course. Also, class participation will be a part of that. As I look at my sheet here, where I see yellow is people who did not attend a class or for whatever reason, and I will be looking at that as we move along through the course of our class. Okay, so let's talk about this. Our objectives in Chapter 11, and you need to have these, and we will look at problems explaining this. We will look at videos explaining this. Describe what a standard cost is. What is a standard cost? Determine direct material variances. Determine labor and manufacturing overhead variances. And prepare variance reports and balance scorecards. Exercises 3 and 4 and problem 11-2A are examples of these objectives for this chapter. You should concentrate your reading, concentrate on preparing yourself. You will see questions like that on the quiz this coming week on chapters 10 and 11 and on examination number 3 coming up in about three weeks. So what is a standard cost? A standard cost is a budgeted cost. A standard cost is what you expect the cost and the amount of quantity of using that cost in your production. It's a planned cost based on price and based on quantity. That's important. Based on price and based on quantity. You can be favorable in price, but unfavorable in quantity. What does that mean? Unfavorable in price means it cost you less than what you thought. Unfavorable in quantity means you used more than you thought. Price versus quantity for materials, for labor, for manufacturing overhead. It gives you even more detail on why you screwed up. It gives you more detail on where you planned incorrectly. And we'll look examples of that in a minute. But first, let's see how they do it at one of the institutions where we can't go too much anymore, Starbucks. Let's see how they do it at Starbucks. Oops, hang on. Bear with me, folks. Technical difficulties in Claremont. Now let's try it. Well, let's see how they do it. Might have to flag this. Well, I can't show it today for some reason, guys. Sorry. So let's get out of this and go back to this. This is called Mr. Hassey's Plan B. He always has a Plan B. All right. Drives his wife nuts, but he always does. All right. The advantages of standard costing. Let's say I'm a company like Starbucks. Let's say I'm a company like University of Laverne. Let's say I'm a company like XYZ. I want to make sure I'm managing efficiently. All right. How do I manage efficiently? I'm staying within my budgets. I have a planned budget. We've talked about that in chapters 9 and 10. I have a planned budget. Am I spending or earning revenue in accordance to my plan? But if I'm in a manufacturing or even a service industry and I have a planned cost, that cost can be reviewed at a variety of different ways. Is the cost in dollars of that product within plan, but also is the amount that I'm using of that product in plan? Pounds, ounces, square footage. Is the quantity of the variance in not price, but in the quantity of what I'm using, all right? That's what a standard cost is. It's the relationship of price versus quantity. A standard is on a unit basis. It's a budget for a unit, where a total budget is a total dollar amount that we've looked at in prior chapters. What's our variable cost, total cost in our budgets? But a standard is a unit budget for a particular unit, and that's important. So you have to set standards in your company. If any of you have ever worked for a company where they have internal auditors or internal accountants, or they have cost accountants, their job is to set standards of your pricing and cost of product. What should be our standard labor hour per rate? What should be, how much labor hours should be interpreted in the production of a profit? These are constantly being evaluated week by week in companies, especially the larger companies, is what are our deal standards? What are our budget levels? All right. Most companies use standards that set them in optimal, ideal, normal, or practical levels. In other words, what is our set standards? What do we want to set our standards at? All right. Well, it's usually at a normal level of operations. If we were running or operating normally, what is our ideal standards? What are our ideal costs? That's our normal level. All right. For example, here's a standard for direct materials. We're going to purchase our materials at $2.70. We're going to have freight charges for them to be delivered to us, and we're going to have 10 cents for receiving and handling. Our materials per pound are $3 a pound. So in our production of our product, it's going to cost us $3 a pound to use the materials in our production process. That's the standard materials price, $3 a pound. But at the same time, how many units or how many pounds are we going to be using in the production of our product? 3.5 is the required materials. We're going to have a 0.4 pounds of waste. You guys ever visit a manufacturing plant? Maybe you have, maybe you haven't. But there's always waste. There's always things on the floor. There's always things at the end of the line that are saying, well, why don't we need this anymore? It's called waste. In some industries, it's called spoilage. Certain part of the product is spoiled, so you got to throw it away. So in other words, it's going to cost us, it's going to be $4 pounds per product. So that's our standard quantity cost or variance. So it's going to cost us $12 in materials for every unit, $3 of price standard, $4 in quantity standard. That's the definition of a standard. It's a planned cost per unit in regards to price of the variable or the materials.
How do you change your name?
The number of pounds you're going to use per unit. That's how specific we're now getting. I know this sounds kind of geeky, like, oh God, why would I want to do this? Well, because it tells you, you might have planned the correct price of $3, but you might have used 4.5 pounds in your product. Maybe you're wasting more than you planned. Maybe you had more spoilage. Maybe the product was engineered incorrectly and you're using more materials. If you're building hundreds of thousands of units, knowing these variances, knowing these standards is very important. Let's look at an example. Exercise 11-11.3 in your textbook. Compute the standard cost per unit. What is it? What are the budgets? What are the standards for this product for Stephanie Company? Direct materials, each unit contains 4.5 pounds of materials. The average waste and spoilage is a half a pound, and the materials cost $5 a pound. But Stephanie always takes a $2 cash discount, all from its suppliers. The freight cost is 25 cents a pound. What is the standard for materials? Well, let's take a look at that. Here's my little whiteboard. Professor Hassey's version of writing on a chalkboard. All right. So what are our direct material costs? Remember they said our cost per pound is $5 a pound minus, remember we get a 2% discount. They told us we get a 2% discount on each product, each unit. And to that, we also add 25 cents. Remember, we're adding 25 cents because that's per the problem. Let's go back to that. The 25 cents is freight costs. Remember, we had freight costs. We can't forget the freight costs. So back to our problem. So if we had $5 a pound less the 2% discount on $5 plus the freight costs, our total cost will be $5.15 if we do the arithmetic. All right. At the same time, we're going to have pounds per unit equaling, they tell us we're using 4.5 pounds plus a half a pound in spoilage or waste. Thus, we get 5 pounds per unit. That's our quantity standard. Thus, if we do the math, 5 pounds times $5.15, which is our standard price, equals our total standards for materials, $25.75. That's our standards. So again, our standard cost is the cost we paid to our supplier, less the discount, plus the freight car charge, $5.15. We're going to use 4.5 pounds per unit of materials, but also we're going to have a half a pound of spoilage or waste. So we're going to plan on 5 pounds. At $5.15 a pound times 5 pounds, there's our material standard, $25.75. All right. Back to our problem. Oops, bear with me. I got so many files open as usual. I'm missing some. Here we go. So we just determined that it's $25.75 for materials. What is our direct labor standard? Each unit requires 2 hours of labor, setup, cleanup, and downtime, averaging 0.4 hours per unit. 2 hours of labor with setup, cleaning, and downtime, another 0.4 hours per unit. The average hourly labor pay rate for its employees are $12. Payroll taxes and fringe benefits are another $3. That's important to remember. Our labor costs are not only what we pay our employees, it's the payroll fringe benefits that we also pay. Health insurance, retirement, disability insurance, unemployment insurance, those payroll taxes and fringe benefits. So we're using 2 hours of labor plus an additional 0.4 hours in cleanup, setup, etc. It's costing us $12 a unit or an hour in rate and an additional $3 for fringe benefits. What would be our direct labor standards? Well, let's take a look at that. Our direct labor, first of all, our cost per hour. We're paying $12 a rate, cheap son of a guns, per hour to our employees, plus the $3 an hour in fringe benefits. So our labor price standard is $15 per hour. Our material or use of labor hours, our hours per unit is 2 hours plus the 0.4 hours of downtime. Thus, it's going to, where our labor quantity standards is 2.4 hours. If we take $15 an hour times 2.4 hours, our total direct labor standard is equal to $36 a unit. All right, so now we've taken a look at our materials are $25.75 per unit for the amount of cost and pounds we use per unit. At the same time, our direct labor is $36 per unit, which is made up of $15 an hour for 2.4 hours of labor associated with every unit. Again, this doesn't sound too sexy, but at the same time, if I'm managing a production process, these are my planned costs. These are my planned standards. And that's what we use to base our other things on, our costs, our budgets. Well, let's go back to the problem. Finally, what is our manufacturing overhead standard? Remember, our three costs are materials, labor, and overhead. What are our plans for overhead? What's our standards? Well, it says overhead is applied at a rate of $7 per direct labor hour. That's what our overhead plan is, $7 per direct labor hour. Well, let's go back to our screen, our calculation. What are our overhead standards? Manufacturing overhead. Well, remember, we're planning on 2.4 hours of labor. We already did that in our labor estimates per unit. And also our overhead cost is $7 per labor hour. That's our planned overhead. So thus our overhead standard, which is a combination of price and use, is 7 times 2.4 or $16.80 a unit. Now what we've done is we've now planned for our cost and standards for our company. We've determined that it's going to cost us $25.75. Oops, $25.75. It's going to cost us, where is that? There it is. It's going to cost us $25.75 per unit, which is made up of price per pound and the number of pounds. It's going to cost us $36 for labor, which is made up of $15 a direct labor hour times 2.4 hours of labor for every unit. And it's going to cost us $16.80 in overhead based on the 2.4 labor hours allocation of overhead at $7 an hour. So we all said and done, when we get done with that, our total cost is total standard cost per unit is equal to $78.55. And that's our standard cost. So somebody goes to you and says, hey, what are your standards for production? Oh, it's $78.55. If anyone ever does that, you better buy them a drink. All right, but it's $78.55. That's what we plan on spending for materials, labor, and overhead. Now, when the actual variance numbers come in, which we'll look at in subsequent problems, what are our actual numbers? What are our actual costs per pound? What are our actual number of pounds used? What are our actual labor costs? What are our actual labor hours used? What are our actual overhead expenses? Then we can do a variance report comparing standards to actual numbers. And there are people who do this every day, every hour for companies because it determines their efficiency in planning and production. The same thing holds true with classes, education. What is it costing us per labor hour of faculty, and how many hours are faculty spending teaching? All right, that's an interesting analysis, and that is done at every institution that I know of. So this is the definition of standard cost. This is what it's telling us, how we plan. This is the budget per unit of production. And if, let's say, I plan on producing 10,000 units, then my total manufacturing cost budget would be 10,000 times $78.55. That's my total budget. So in chapter 11, this is what you have to concentrate on is number one, what is the definition of standards? This exercise 11-3 is to determine that. And you practice that again in 11-4, which we'll look at on Wednesday. And then you take the actual numbers and prepare a variance report, which is problem 11-2A, which we will also do on Wednesday. And I would like you guys to put those together, if you'd like, for Wednesday for review in class, because here's why. We're going to have a problem just like that in our quiz that I give you on Wednesday. You determine the standard costs, and then you determine the variance. Let's take a look at that variance. Oops, just a sec. Again, here's what we just did in an exercise 11-3, put in a little bit different, easier way to look at it. This product is for this company, and here are their standards. They're going to use 4 pounds of materials per unit. They're going to use 2 hours of labor, and the overhead is allocated based on overhead hours. Their standard price is $3 a pound for materials, $15 for labor, and $5 for overhead. Their total standard per gallon, that's what they're producing, a gallon of something. What is it? Tonic or something? Oh God. All right, is 52 bucks. That's what it's costing them to produce the product. And our last problem we did on exercise 11-3, it was $78.55 a unit. So if I ever ask you in a quiz, okay, what are the standards for this product? The standards are materials, labor, and overhead quantity, price, total. Quantity, price, total. Those are the standards. Now, let's take a look at this. This is going to be a little confusing, but it's pretty simple, really. What's a variance? You have material variance, labor variance, and overhead variance, which equals total variance. In other words, when I start getting the actual numbers, what are my material actual to our planned, our standard? What are our labor actual to our labor standard? What is our overhead actual to our overhead standard? The total is overhead variance. And this looks like a mess, but it kind of summarizes this. This is taken from our text. Our total variance for labor and materials is the actual compared to the standards. So our quantity variance is the actual quantity versus the standard quantity. That gives us a quantity variance. Our price variance is the price, actual price to the standard price. That's the price variance. Here's how this looks. Oops, there we go. Let's say that problem we just looked at, 1,000 gallons of this tonic used 4,200 pounds of materials and cost $3.10 per unit. The standard cost was $3. All right. What's our quantity variance? All right. What's our total variance? Well, we actually paid $3.10 times 4,200 pounds. We paid $13,020. Our variances or our standards were we're going to use 4,000 gallons and at a price of $3, $12,000. So our total variance was $1,020 unfavorable. We spent more than we planned, right? We spent more than we planned. Remember, our plan was right here. Oops. Our plan was right there. So let's go back to that. So how do we compute the variances for each level? Remember, we had a variance of $1,020 total. Total what we paid, total what we standards, what we actually used, what we actually paid, what we standard or planned on using, planned on paying. Well, here's the materials variance. Remember, our materials, we paid $3,020, which was 4,200 pounds at $3.10. Well, remember, our price variance was, our price standard was $3. If we took that $3 and multiplied it times what we actually used, that's $12,600. We had a materials price variance of $420. In other words, we spent 10 cents more per unit times 4,200. $420 price variance. We were off in the price. What were we off in the volume? All right. Well, the volume, we anticipated 4,200 units, or excuse me, actually it was 4,200 pounds. We planned on 4,000 pounds. That difference of 200 pounds times the standard price of $3 is $600 unfavorable in quantity. Because we used 200 more pounds, that caused an unfavorable cost of $600. Thus, our total variance is the 1,020, made up of price, because we paid 10 cents more, and quantity, because we used 200 pounds more. That's our materials price variance. So that tells the manager that they screwed up on both price and quantity. They planned on $3 a pound, and they actually spent $3.10. They planned on 4,000 pounds. They actually used 4,200. Their variance was $1,020. Now, again, this doesn't seem to be too sexy to everybody, but if I'm producing 1 million units a year, if I'm producing 1 million units a year, and for every unit I have $1,020 unfavorable variance, you do the math. Ouch. That's a lot of money. So this is a key managerial accounting information because it tells me that my budget was wrong both on price and quantity, and I better fix it. Here's another one for labor. Same company. Member and labor, we planned on using 2,000 hours, 4,200 pounds, labor variance. Oh, I went too far. Yeah, that's right. Our labor variance is, our labor rate was $3.10 for labor, and thus we have a labor variance. What I would like you to do this week in reading your chapter is make sure you understand why we're off in labor. We planned on 2,000 hours at $15 an hour. In this example, the company used 2,100 labor hours, and their cost was $15 an hour. So the price variance, we paid the same amount of price. But in the quantity variance, we used 100 more hours. Thus, we get our total variance. Here, we paid the same amount. So our labor variance is positive. Remember, if we have our labor rate was 15 and we only paid 20 cents per hour, $14.80, that's 20 cent savings, we have that variable. That combination gives us our total variance. The point we're trying to do here is make sure that we understand what we did wrong in the budgeting process. Why did we anticipate a certain labor rate and we had another labor rate? Why did we anticipate variances in quantity of materials used? These are what are called standard labor cost variances. And the bottom line is putting together a report that shows us that. And that report is going to be a summary of an analysis of a company. For example, like this. Here's an income statement for the company. And a manager can look at this and say, oh, we made $12,000 in profit. Aren't we great? But we could have made more because we are $3,000 unfavorable in our plan to our actual. We are unfavorable in price, quantity, overhead, labor, quantity, and overhead. We could have made $15,000 if we were right on our assumptions, but we weren't. That's our net income. This is a report that's used in the analysis of balanced scorecard, balanced scorecard. All right, you made a profit, good job, $12,000, but we could have done better. Why were we unfavorable in certain parts of our production process? What was the story? Maybe we couldn't avoid being unfavorable. Maybe our suppliers raised the cost. Maybe our engineering of the product, the production of the product needed more hours. Maybe our overhead estimates were incorrect. But if then we learn and do pass that on to the next fiscal year. What we learn from our unfavorable and favorable variances in the budgeting process of the next year or the production process in the next year, we become better at what we do. A lot of times you go into a just in the last few weeks, I went into Vons like a month ago, and the waiting line was around the block to get into the grocery store. That was 4 months ago. A lot of people were anxious to get into the store and buy product. The store wasn't managing the store very well. I went into the Vons store this weekend, same number of people, but there was no waiting line. It was being run more efficiently. They had people at the door to let people in and out, and a more stable environment of keeping track of people in the store. They had their shelves properly stocked. Some weren't, some not. But they were managing it better because they learned from a month ago that they weren't managing it correctly. So they did it better. If the same long line was there when I went back this weekend, bye-bye Vons, I'm going to go shop at Trader Joe's. You lose customers when you don't fix your things you do properly. And I think for us as business administration majors, that's an important quality. All right, I screwed up, or I did a bad estimate. I didn't do as well. Learn from that in the next period. Learn from that to do better the next time. And this is where standards and price variances and quantity variances help you do that management. All right. On Wednesday, we'll look at exercise 4, where we do the whole standards for labor, and we'll look at problem 11.2a, which looks at the whole variance analysis standards to actual. And then we will have a quiz about this over the next weekend and also on chapter 10, and we'll talk about that on Wednesday. And also I'll get my videos done. I don't know why that Starbucks didn't post it today. So that's where we stand. Again, if you have any questions about the midterm examination, either talk to me off class, text, email, office hours on Wednesday, and I will guide you through that. But again, check your cumulative averages in the course, but here's the sobering number. 62% of your grade has been completed. There's still 1/3 of your grade still left. 1/3 of your grade for Mr. Hassey to get tougher. I'm teasing. You have 1/3 of your grade left. So just make sure you understand that. Oh, I got a 96, 97 average. I'm done with this course. This is cake. You can get a B or a C on the next examination, or a B or a C on the next 2 quizzes, and end up with a B+ or a B or an A-, not 96 or 97. So just remember that as we go forward in how you handle this course, because I know I'm not going to admit it to you guys, but this is getting tough online. Maybe some of you are getting into the swing of things and it's managing fine, but it's still, this is not an easy way to learn. And so you have to stay on top of it, look at the problems, prepare for the quizzes, and you'll be fine. And look at the videos and information I provide. Again, I've recorded this class so you can review it later on. And let me get back to this, make sure I have everybody that I thought was here. And it sure looks like everybody's here who I thought was here. Tanner, I can't see your head. Where are you? Oh, there you are. All right. Mason's not outdoors today, but he looks that he's confused, but we'll let that go. Anybody have any questions? Anybody have any problems?
Oh, Mr. Hassey, I don't know if you noticed, but while you were in class, my dog jumped in my bed and she's like right here.
What is your dog's name, Anthony?
Molly.
Molly. How old is Molly?
She's 2 years old.
Is she a friend of yours?
Yeah, she jumped on the bed while you were in class.
Well, Molly knows the importance of price and quantity variances. Molly knows the importance of standards. Tanner, if you go to your mom and say, Mr. Hassey taught me standards today, how does that relate to you, Mom? And she'll say, yes, at my college, we use standards all the time. Tanner, I'm telling you.
Wait, is Molly wearing clothes?
Molly
Yeah.
is wearing clothes. We're not gonna comment on that. We're gonna let that go.
That's
Yes,
funny.
very good. That's Molly. Molly has more clothes on than I have. No, I'm
There's
not gonna.
like 20.
I'm not going to show that site because that would not be very attractive. You just
Yeah,
see
this
the
is a
professor.
school website.
You just
I
see
painted.
Professor
I
Hassett
painted the
like
other
this.
day.
What's
I got
that, Mason?
I painted the other day.
You fainted the other day?
Painted.
Oh,
I
you
got a painting up
painted.
there. And two right there.
Mason, did you have your glasses on when you were doing that painting?
No, I don't wear glasses.
It kind of looks like it. Okay.
Mhm.
Very nice. Can you paint me a picture?
I
Post it.
can.
Why don't you do an accounting type picture, Professor Hassey, and we'll take a look at it on Wednesday.
Okay, I can try. I'll try to fix them now.
You got to remember, Mason, if you ever do that in this class, you're subjected to some teasing.
That's fine.
All right. I
I
don't
get
want to.
teased all the time.
All right. I don't want to create any psychological problems by teasing students that I don't know about. So, okay.
Not more than I already have.
All right. Oh, yeah, that's true. So, are you going to take Molly out for a walk, Anthony, a little bit later?
Every morning she goes with my mom to outside in the grass, and she goes.
Does Molly have any brothers or sisters in the house?
Yeah, she has. I have another dog. He's 10 years old now. His name's Brownie. He's a wiener dog.
A wiener dog. I'm going to stay away from that one. All right. So now that we've met Molly today and Mason's going to paint us a picture, Cameron's going to comb his hair for Wednesday, and we'll be in good shape. All right. All right, guys. Anything else? Chris, are you working at the donut shop this week?
Yes, I am.
How about bringing a dozen to the class on Wednesday?
Sure. I don't know how I'm gonna share a dozen with you guys, but we can probably manage that. Wait. I work this weekend though, not on Wednesday.
Oh, so you're done working for the week?
Yes. Well, until Thursday.
Well then, Chris, turn off your mic. I don't want to talk to you anymore. Thank you. You're done. You're done.
Yeah,
Shut up.
all
Get out.
right.
No, leave, please. All right. No, thanks, Chris. So you're going to
Welcome.
work, Chris, one last question. You're going to work next weekend?
Yeah, I'll be there Thursday through Saturday.
All right, I'll definitely see you on Thursday. I haven't had a donut
Bring
in
them
7
Monday then.
I don't know.
Yeah.
Bring
you
2
said
dozen.
you-
There's 22 people. You got to bring 2 dozen.
Who's talking there? Who is that person? Is that Mason?
Of course.
Mason, concentrate on your paintings and standard cost, please. Don't worry about the donuts.
Okay.
All right, guys, enough of this nonsense. Where's somebody I haven't heard from in a while? Miss Pauling, are you okay?
Yes, I'm good.
You sure?
Yep,
You want to turn on your video?
not particularly.
Poop. All right. See you later. Thanks. All right, everybody. If there's nothing else, I'll see you guys Wednesday. Look at standards, and we'll see you then. Adios.
See you later,
Bye,
Miss
bye, Professor.
See you, Chris. Palm, take.
Hi, Professor. Thank you.
Thank you. Yeah, thank you.
Hey, Professor.
Aiden, adios. Cerise, adios. Palm, hang in there, buddy. I'm playing golf this Friday, Palm. I'm playing golf at Los Serranos. Ha ha.
Professor, what do you think about the beaches being open, the city beaches?
Scares the living bejesus out of me. I'm not going down there.
Really? Would it
Yeah.
bother you if I was at the beach right now?
Well, as long as I don't have any contact with you, that's fine by me. But it's
Well, I'll see
then-
you on Thursday at the donut shop.
yeah, I'm gonna be wearing my mask and my overalls, and you're not no contact. All right, Chris.
All right, take care.
See you guys. Mike, see ya.